At least that's what the headlines are screaming after their latest earnings report. But here at Iron Financial, we don't just read the headlines, we X-ray the foundation. I'm your lead analyst, and with me, as always, is our market skeptic. Today, we're putting on the hard hats and grabbing the blueprints to see if Boeing's billion-dollar rebuild is a skyscraper in the making, or maybe just a house of cards waiting for a gust of wind. Let's get to work.
So, let's start with the number that has everyone talking, $10.23. Just let that sink in for a moment. That is the GAAP earnings per share Boeing just posted for the fourth quarter of 2025. For a company that has been, let's be honest, in a financial nosedive for years, a company many investors had completely written off, this isn't just a number, it's a sonic boom. It's the kind of figure that screams turnaround from the rooftops and has Wall Street analysts scrambling to upgrade their ratings. The big question we have to ask is this the real deal, or are we just looking at a dead cat bounce before the next plunge?
And here you have it, the official story coming straight from the cockpit. The CEO, Kelly Orberg, is telling the market the foundation is laid, the momentum is building, and it is nothing but clear skies ahead. You know, the bull case here is simple. It's compelling. The storm is over, the turbulence is finally past, and the rebuild is solid as a rock. But you know, here at Iron Financial, we don't just trust the pilot's soothing announcement over the intercom. No, we get up, we walk to the cockpit, and we inspect the plane ourselves.
All right, here's our flight plan for today's deep dive. First, we're going to look at that shocking turnaround in the headline numbers that are grabbing all the attention. Then, and this is crucial, we're going to ask the $9.6 billion question that could change this entire narrative. After that, we are going inside the factory for a real stress test of their core business. We'll run a full systems check on their defense and services divisions. And then we'll inspect the company's financial bedrock, its cash flow. And finally, after all of that, we will deliver the Iron Financial verdict. So buckle up, it's going to be a bumpy ride.
Okay, let's start with the bull case. And I have to be clear, the headline numbers are staggering. On the surface, if you just glance at this report, this looks like a textbook turnaround story. I mean, it is the kind of corporate comeback they write business school case studies about. The raw power in these initial figures suggests that Boeing isn't just getting back on its feet, it looks like it's better, stronger, and faster than ever before.
Now just look at this revenue line. We're going from $15.2 billion to nearly $24 billion in a single year. That is a 57% jump. You have to understand, for a behemoth of this size, a company with a market cap in the hundreds of billions, that is not just growth, it's a rocket launch. This signals that global demand for air travel is absolutely white hot, and maybe more importantly, it signals that Boeing's factories are finally delivering the goods. This is a story of pure, unadulterated execution.
But the real story, the one that's causing the shockwave across the market, is right here in the margins. You see, it's one thing to sell more. It's a completely different thing to actually make money doing it. Just a year ago, they were torching nearly 25 cents on every single dollar of sales. Think about that, a catastrophic negative margin. Today, they are pocketing almost 37 cents of profit on every dollar that comes in the door. That's not just a comeback. That's a resurrection. This single chart right here is the bull case in one powerful image. It looks like an absolute fortress of profitability.
Okay, not so fast. That's a very pretty picture, I'll give you that. But I'm not sold yet. A smart investor, a strong investor, always kicks the tires before they drive the car off the lot. And my question is pretty simple. Is this real, operational, repeatable profit that comes from the hard work of building and selling airplanes, or is it a magic trick? Is it a bit of financial sleight of hand designed to make things look better than they are? Because from where I'm sitting, these numbers look almost, well, too good to be true.
Exactly. And that brings us to this critical term, gain on sale. It's a fancy accounting term for a very simple concept. It's selling off the family's silver to pay the bills. This isn't profit from your core business of making widgets. This is a one-time cash grab you get by auctioning off a piece of the company. It's like selling a kidney to pay your mortgage. Sure, it might solve your immediate cash problem, but it is not a sustainable business model, and you can only do it so many times before you run out of parts to sell. And there it is, the smoking gun. Buried deep in the financials is a $9.6 billion gain on sale from unloading their Digital Aviation Solutions business. This single transaction, this one-time sale, is the rocket fuel behind that incredible margin we just saw. In fact, it accounts for almost the entire operating profit for the quarter. You take that away, and the whole glorious story just falls apart. This isn't a solid foundation. This is a sinkhole waiting to happen. Okay, that is a fair point. A one-time gain is a distraction. I completely agree.
It clouds the picture of what's happening day to day on the factory floor. So the real test, the real stress test, is the core business. We have to go to the heart of the operation, the engine room of the entire company, the commercial airplanes division. If this division is solid, the whole company is solid. The numbers here, stripped of any one-off accounting items, will tell us the real story of this recovery.
And this, right here, is undeniable strength. The commercial airplanes revenue more than doubled. It went from $4.8 billion to $11.4 billion in just 12 months. This isn't smoke and mirrors. This is the sound of the production line humming. They've ramped up the 737 line. They're stabilizing the 787 deliveries. This is real physical progress that you can see and touch. This is the engine of the company firing on all cylinders.
Firing on all cylinders? Or just burning through cash at a much faster rate? Look, doubling revenue is great, but they are still losing money on every single plane they sell. Look at that margin, negative 5.6%. That means after all that work, after all those sales, they lost almost 6 cents on every dollar. Improvement is one thing, but the destination has to be profitability, and right now, they're not even close. The core business, the thing they are famous for, is still a money pit. How in the world can you build a skyscraper on a swamp? Because you're missing the big picture. You are hyper-focused on the short-term construction costs, not the long-term value of the finished skyscraper. That number you see on your screen, $567 billion, that is the record-breaking backlog for this division alone. That is a fortress of future revenue from over 6,100 planes that airlines have already signed contracts to buy. Today's margin pressure is just a speed bump from supply chain headaches and labor costs. It's not a permanent roadblock. That backlog is a guarantee of profitability for decades to come.
Wait, a backlog is only a good thing if you're making money on it. Is this a pipeline of guaranteed future profit, or is it a contractual death sentence to build thousands of planes at a loss? Think about it. If they can't turn a profit now, when demand is supposedly sky high and they're ramping up production, what magical event is going to suddenly make the next 6,100 planes profitable? A backlog of unprofitable orders isn't an asset, it's a massive liability sitting on the balance sheet. All right, so the health of the commercial division is clearly a mixed bag. The revenue growth is impressive, can't deny that, but the profitability is a major red flag. So let's check the other two legs of this stool: defense, space and security, and global services. I mean, if the main commercial leg is this wobbly, the other two need to be rock solid, made of steel, to keep this whole company stable. And looking at defense, it appears to be on an absolute tear. Revenue is up substantially, from $5.4 billion to $7.4 billion. That's solid. The order book is bulging with a record $85 billion backlog, and it's filled with high-demand programs like the KC-46A tankers and Apache helicopters. In a world with increasing geopolitical uncertainty, Boeing's defense business should be booming. This leg of the stool, this one looks like it's forged from titanium.
Titanium? It looks more like tin foil to me. It is the exact same story as the commercial side, all over again. The revenue headline looks great, but the division is bleeding cash. A negative 6.8% margin means they are losing money on every tank, every helicopter, and every satellite they build for the government. So now we've established that 2 out of the 3 legs of this stool are completely rotten. That's not a stool you can sit on. That's a trap waiting to break. And this is supposed to be the third leg, the one that's holding everything up? Global Services is supposed to be the steady cash cow, the reliable, high-margin business that funds everything else, the boring, predictable part of the company. But just look at the revenue. It's dead flat. In a year when the entire world started flying again, when planes were in the air needing service, this supposed growth engine is just sputtering. This isn't a pillar of support. It's a toothpick.
But look at that margin, 202.4%. This is the engine room of the whole company. This is where the real profit is being. Oh, are you kidding me? That's the $9.6 billion asset sale again? We're right back where we started. That number is a complete mirage. You take away that one-time gain, and this engine is running on fumes. So let's be honest about what we're looking at here. 2 core divisions are actively burning cash, and the third is propped up by a complete illusion. This foundation isn't just cracked, it's made of sand.
Right. We've inspected the operations and the picture is getting a lot clearer. The revenue is strong, that's the good news, but the core business is losing money hand over fist. So now we have to look at the plumbing. We have to follow the money. The balance sheet and the cash flow statement will tell us, without any accounting tricks or one-time sales, if this company is truly a cash machine or if it's just a cash furnace. Can this foundation even hold up the weight of the building?
So on the one hand, cash is up by over $6 billion in the quarter, which looks good. It's a nice cushion. But look at the other side of the ledger. So is the debt. They have a bigger piggy bank, yes, but they've also got a much bigger mortgage. That asset sale was a short-term Band-Aid on what is a long-term bullet wound. The fundamental problem is that the company is still drowning in over $54 billion of debt, and that number is still climbing. That's a heavy, heavy weight on the structure.
But you have to look at the progress here. They've almost stopped the bleeding entirely. They went from burning through over $14 billion in cash last year to just under $2 billion this year. That is a massive operational turnaround. It shows discipline. They're on the very edge of being cash flow positive, but they're still bleeding. They still torched another $2 billion this year. A company this big with this much revenue should be printing money, not incinerating it. This isn't a turnaround. It's a slow-motion train wreck that's just slowing down a little bit.
Okay, we've seen the good, we've seen the bad, and we have definitely seen the ugly. We've pressure tested the revenue, we've drilled deep into the profitability, and we've inspected the financial plumbing. We have kicked the tires, we've checked under the hood, and we've stress tested the engine. Now it is time for the iron financial verdict. Is Boeing a rocket ship to the moon or a lead balloon heading straight for the ground? Is this a generational opportunity or is it a value trap?
So here's the bottom line. The bulls see a skyscraper under construction. They see revenue that is soaring to record heights. They see the massive $682 billion backlog as a fortress of future sales, and they see the cash burn has been almost completely extinguished. They see a giant reawakening. The bears, however, they see a house of cards. They see the headline profit as a mirage created by a one-time sale. They see the core business of building planes and defense equipment as a money pit, and they see that mountain of debt as a ticking time bomb. So what's our verdict here at Iron Financial? Boeing is a high-stakes gamble. The potential for a massive payoff is absolutely there if, and it's a big if, they can translate that incredible revenue growth into real, sustainable profit. But the risk of a catastrophic collapse is also very real if they can't. The foundation is still wet cement. This is not a stock for the faint of heart. This is a stock for investors with nerves of steel. And the final question we have to leave you with is, are you one of them?